Well, good morning, everyone. Today is Wednesday. My name is Daniel McCrane with McCrane Associates Incorporated. And just want to tell you a little bit quickly about McCrane Associates, what we do. So, our customers, our clients come to us because they just kind of run out of ideas, hit the wall on increasing profitability and scalability in their business. So, we work with them on the systems that we use and on the strategies that we use in business to increase profitability and scalability, guaranteed, by the way. And then we also work with them on setting their business up so that someday in the future they will be able to leave a legacy and to exit their business. And we do that through our long term planning. So, today, what I want to talk about is making sure that your business is in the best position possible so that when the day comes when you're ready to pass the business over to someone else, whatever that might look like, that your business looks really good to that other person who's going to be taking over, and that your business has some value to it. I want to make sure that when you're ready to walk away from your business, that you're getting the maximum value for your business. Now, there are three main reports that you need to pay attention to. Every small business owner needs to do this, regardless of size of their business. So I've talked about those a little bit already. It's your profit and loss statement, your balance sheet, and then the last one is your cash flow statement. Now, cash flow statement, in a way, is sort of as simple as looking in your bank account and seeing, is there any money there? Or going through some of your bank statements and just looking things over to make sure that your revenue that's coming in is greater than your expenses going out. There's a little more to a cash flow statement than that, though. The cash flow statement does summarize all of the income that has come in from the business. So, whether that's through sales of any kind, whether that's through any financing or investing or anything else, if you took out a loan, then the proceeds of that loan would show up on the cash flow statement. Then the other side of that cash flow statement is the money that is going out, particularly in the form of debt service. So if you do have loans or anything, you want to make sure that those are covered. So as you look at your business, you want to make sure that you're not putting yourself in a position where you're going to get into trouble. Now, making sure that your income exceeds your expenses, that's just typical budgeting. You should be able to do that and follow that. The cash flow statement, though, takes a look at other expenses that you might have that could really get you into trouble if you don't have enough cash flow, such as, can we afford to pay back this debt that we've borrowed? So that's one particular reason you might use a cash flow statement. So overall, it just shows how much cash there is in the business, how well you're operating, how efficiently you're operating. The reason you want to do that is to find out whether uh, first of all, what's the health of the business, like I mentioned, but then also, like I talked about yesterday, to figure out how to expand the business. So, if there is cash in the business, can that cash be used in a way to grow the business somehow? Maybe that means purchasing some equipment. Maybe that means hiring somebody. Maybe that means buying another company to expand your business. But that's one thing that you can use the cash flow statement for. If you ever tried to bring investors into the company, they would probably ask to see a cash flow statement. They want to know that the company is healthy, and if they invest money in your business, they will get a return on their investment. So the cash flow statement makes up one of the three major documents, reports that you need to take a look at inside your business to make sure your business is healthy. So those three together: profit and loss, balance statement, and cash flow statement. So take a look at that. It's one of the documents to look at on a regular basis. Maybe weekly is enough for a cash flow statement. I mentioned balance sheet could just be a couple times a year. Profit and loss statement, maybe just monthly. But the cash flow statement, you might want to take a look at a little more frequently so that you know how well the company is performing. Could be monthly, weekly might be a better frequency, though. So with that, I'm going to go ahead and finish up here. I'm going to challenge you, take a look at your cash flow statement this week. So have a great day, everyone. And